Namaste. Welcome to our channel Rathish Chartered Accountant. Today I am discussing about the two types of transactions that can be done FEMA Act 1999. The two types of transactions are called capital account transactions and current account transactions. Under the FEMA Act, current account transactions are fully free. They can be done at any cost without any approval of the RBI of the Government of India or such kind of things. But in case of capital account transactions, there is a prescribed transaction that is being said itself. These transactions could only be sent in that prescribed schedules itself only. Otherwise, the approval of the RBI or the Government of India is to be required itself. So what is a capital account transaction? That's what I'm first discussing about. Capital account transaction is a transaction which alters the assets, liabilities of contingent liabilities of a person resident outside India, and the assets are that is in India itself. Okay, or which alters the assets, liabilities or contingent liabilities of a person resident in India by a transaction outside India. So in nutshell, if an assets and liabilities outside India is affected by the transaction in India by a resident in India, it is called a capital account transaction. Or if an assets or liabilities inside India is affected by a transaction from a person non-resident itself, this is called a capital account transactions. Capital account transactions are divided into 4 or 5 categories. Some of examples I will say. One is that because of transfer of shares or securities. Transfer of shares of a foreign security done by a resident person in India is called a capital account transaction. And transfer of shares, branch, license office in India to a foreign country itself, it is also a capital account transaction itself. Then transfer of shares by a person resident outside India to India is also called as a capital account transaction. Another kind of transaction that is coming in the FEMA capital account transactions are borrowings between the persons. If a borrowing is done by a non-resident person from India, or a borrowing is done by a resident person from outside India, or there is a deposit between a non-resident person and resident person coming out, it is called as a capital account transaction. The other example of the capital account transaction is called transfer of immovable. I am making a transaction of immovable property outside India from India. It is called a capital account transaction. Or a person non-resident outside India is making a transfer in India. It is called a capital account transactions. Then the guarantee is given. Suppose for a debts or liabilities in India, a guarantee is given by a non-resident person, it is a capital account transaction. If a guarantee is given by a resident person for a debts or loans or some kind of liabilities outside India for a non-resident person, it is called as a capital account transaction. Then another prescribed criteria is called the investments in India. If I just described in my previous video, investments in India done by a non-resident person or non-resident company in India is a capital account transaction. Investment outside India from a resident person is called as a capital account transactions. There are certain capital account transactions which are prohibited. These transactions could not be done without the approval of the RBI or the central government itself. Such kind of a transactions are transactions that or the investments that is done in a chit fund, a nidhi, agricultural plantation activities, a TDR transactions, etc. Such kind of transactions are prohibited under the FEMA Act or under a capital account transaction in FEMA Act. I come over to what are the permissible capital account transactions by a person, resident person in India. That is, the resident person can then do the following transactions that I am saying now out as a capital account transaction without any limit or without any approval of the Government of India or the RBI. Foreign currency loans raised in India. If a foreign currency loans is raised in India by a resident person, it is permissible transaction and no approval is required itself. Then purchase of an insurance policy from a foreign company by a resident person in India, it is a permissible capital account transaction. Then derivative contracts. If a derivative contract is done by a resident person, it is a permissible capital account transaction. So I can describe also what is a derivative transaction itself. Derivative transaction is a transaction which is done upon the future value of a security or something, and it is depend upon a future date also. It is called a derivative transaction. The other kind of transactions that can be permissible transactions are if an Indian person gives a borrowings or loans to a non-resident person for some of his purpose itself, it is a permissible transaction. Vice versa also, if an Indian resident itself takes a loans or borrowings from a foreign resident also, it is also a permissible transaction itself. Another case is maintenance of foreign currency accounts in India by a resident person itself. A foreign currency account, that is also a capital account transaction, and that is permissible under the FEMA Act 1999. Then the other kind of transaction is if a remittance of a capital assets is made outside India from a person resident in India. Suppose if some rent or some kind of things, what is a sale of a property is just done in India and it is just transferred by a resident person to outside India, it is also a capital account transaction, and that is permissible under the FEMA Act 1999. Maintenance of a foreign currency loans raised outside India or in India by a resident person. Suppose if I want to have a loan outside India and I'm a resident in India, then it is permissible. Or a outside NRI person wants a foreign currency loans in India, it is also permissible transactions itself. Export of the foreign currency, not import, export of the foreign currency from India to abroad, it is also a permissible capital account transactions under the FEMA Act 1999. Other thing is that the issue of guarantees. If some of a debt of liability, issue of guarantees given to a non-resident person from India. Some of the loans or debts are there for a non-resident person outside India, and I am a resident person in India and I am just giving some loans to outside India, then it is permissible capital account transactions. These are some gist of the capital account transactions that is permissible under the FEMA Act by a resident in India itself. There are certain capital account transactions for the resident person in India under the liberalized transaction scheme itself. Up to US dollars 250,000, the capital account transactions are freely permissible from India. There is not required any RBI approval or government approval in that case. These are the things that I was saying about the transactions that could be done from a resident person from India towards a foreign currency itself, permissible capital account transaction itself. I'm just coming about the other things, that is the capital account transactions that is permissible for a non-resident person itself. Exactly the same thing itself, it is just specification only. The person in the non-resident outside India can just do the following types of the capital account transactions in India without a permission, without an approval of the RBI of the central government itself. That is, one is the thing is of import of currencies, foreign currencies into India. If a foreign person comes into India and he is just bringing some Indian rupees or foreign currencies into India, so the certain limits itself, that will come out in next video itself. Transfer of the immovable property in India. If a transfer of the immovable property is doing in India, then it is permissible capital account transactions. Certain issues regarding the real estate, agriculture, plantation, chit fund, nidhi, etc. But a person non-resident in India can buy a property in India itself. The next one is the guarantee of any loans or debts in India. If a resident person in India has a big loans or debts in India, and to guarantee some non-resident person outside India for his business purpose or some of his personal purpose itself, it could be done. So a guarantee can be done by a person resident outside India for a person in India for his debts of liabilities, that can be done.